Hey, good afternoon, everybody. Going to go over our Forex trades for this last day of July, July 31st. Pretty active day, and actually active late yesterday afternoon and last evening as well. With the Fed announcement that was announced that came out yesterday at 2 p.m. Eastern Standard Time. They did what was expected, but they made some comments, or at least Janet Yellen made some comments in the beginning of her announcement of the interest rates on basically on the employment in the country. So her actions, or their actions I should say, their actions showed what was expected as far as cutting QE, tapering at another $10 billion a month, looking like they're on track to finish tapering October or November of this year, so in the next few months. But her comments, she had pointed to the underutilization of the employment, or at least the underutilization of the amount of people able to work, meaning she's pointing to that historically, or the 30-plus year low number on the labor force participation rate. So the market, at least from what I'm hearing from guys on the street, is that the Fed and Janet Yellen are leaving it open, and maybe hinting, by using that terminology, hinting that rates will not rise as soon as people were expecting in 2015, and it may take a little bit longer to raise rates. So in our opinion, the Fed is trying to do this balancing act of ending QE, getting us off this QE stimulus that, in our opinion, really isn't creating jobs, isn't really working. But let's put that aside. So their balancing act is ending QE, getting us off of this fiscal stimulus, at the same time without cratering, having the stock market crater on us, having the bond market crater on us, have the dollar spike in value. So they're trying to do this balancing act of doing both. So they're, like I just said, they're winding down QE, but yet they're hinting that rates won't rise as fast as people thought, i.e. the economy is really not as strong as they'd like, because if it's so strong, you're going to have to raise rates to slow it down, right? Or else you're going to have massive inflation. Maybe it's working. Seems to be working. The market was down 58 points during the announcement. As soon as the announcement came out, it dropped down to being down about 80 on the Dow. Reverse course with basically that one line, that underutilization of the workforce, and made the market finish relatively flat. The Dow, the S&P, and the Nasdaq as well. So it's again, you're in this street thinking of, or this view of, bad news is good news for the stock market, because bad news means we'll continue to have extremely low interest rates. The Fed may continue its QE or step in at any given time and pick QE up again. We keep going back to that analogy of a patient being sick and on intravenous, having 5 or 6, 7 intravenous lines. You pull a few out because the patient starts to get better, and all of a sudden their health starts to turn worse again, and what do the doctors do? They end up sticking some of that intravenous back in. Same thing with this economy. If things start to turn and get bad again, they could very easily start to pump that QE back in again. It's almost like the Fed may have painted themselves in a corner, but so far they're doing I will admit, so far they're doing a pretty good balancing act between ending the QE and not having the market get hit. All type of markets get hit. So let's hope they can continue this balancing act. And the worst I don't want to see. Look, I want volatility. I don't want to see the market get slammed 50%, in a short period of time. Of course, no one wants to see it, but we do want some volatility. So those comments definitely created some volatility. Created volatility in the currency world. Late yesterday afternoon, last evening, this morning. Created volatility, some volatility in the stock market this morning on the downside, and we love downside movements. And again, volatility is what we live for. So let's go over. We had a bunch of trades between yesterday afternoon and last night. This morning, got out of some this morning, or we actually got totally flat. I'll try to speed this up because I already went through 5 minutes of rambling on nothing. Anyway, not nothing, but the economy. So first, we had 8 trades, pulled out 56.7 pips, pretty solid. We'll go over them here. The first trade you're looking at here is euro to yen. We got a signal to go long, 136.879. Got out of that, picking up 43.7 pips. Let's see if I can show on the chart. You know, you had these tops here and it busted through. In hindsight, we probably should have held a little, but you know, you have all the Fed stuff coming and comments, so you got to be somewhat careful. These things can reverse as fast as they can go up. Euro Canadian, we had 2 trades in this. One we were short, 1.45549. You can see it was consolidating. Came up to try to break these tops, failed, came back down. I thought we were looking pretty good until it finally popped and ripped up. So you got to cover, you got to take your loss, take your bumps, 29 pips. This trade long, 1.46087. It looked like we might actually get stopped out of this as well. We were given a little bit more room than this, but you have these, you know, these tops here should hopefully act as some support. If they don't, these bottoms could act as support. If they break that, you got to get out. It held these tops and bounced on us. Great trade, picked up 11. Not great trade, but a good trade. Picked up 11.4. No brainer, and you know this happened overnight, so we had just set the profit target just to get out somewhere, pick up 10-15 pips, and that's what we grabbed. Euro US dollar, we were long this 1.33892 again overnight. Looking at these bottoms as the stop area. Again, this we actually got out of this early this morning when we came in. You know, right there, boom, and we took the loss, 23.2 pips. You know, it looks like it was going to break it and go down. It held it, somewhat held it. It did break it a little bit. That's why we got out. And then did try to hold it and bounce, and just had a quick spike. It is up higher now, so we'd still be down even if we were holding it this whole time. So we'll take the bumps and move on. Australian dollar, US dollar, we were short this 0.93219. Again, pretty easy trade. I mean, it took several hours. It took overnight at least. We had our profit targets in here to cover, and actually covered this. We were hoping to come down even further. Covered it early this morning, picked up 28.4 pips. It was nice. You come in the office, you see something like that. You know, we were hoping. We actually had our profit targets down lower, closer to the half figure. Just didn't come in hard enough for us, but we'll take the 28.4 pips and move on. US dollar, Canadian dollar, we were short this, 1.09018. You know, consolidates. We're hoping it breaks down. Again, this was overnight, and then early this morning when we came in, we covered it and took the loss of 9.7 pips. You know, originally we're risking more than 9.7, so we're going to be risking 15 to 20. It never got up that high overnight. Coming this morning, we start to cover positions. So we covered it, took a loss of 9.7. I don't know. Yeah, I think we would have probably got, this was up near our stop. I don't know if it would have got filled or not, but we were out prior to that. And then obviously an hour and a half after we cover, you know, just the luck, it pulls in. So we were right in the long term. In the short term, at least, I guess we could say, you know, we should have held it a little bit longer because we were only down 9.7. But you know, you come in and you start to unwind positions. You just want to get out and get flat. New Zealand dollar, US dollar, along this 0.84853. This was last night. We got out of this prior to being done and going to bed. I was surprised it actually went, when I got up this morning to see the chart, I was surprised it went as high as it went because you have all of this consolidation range, which is going to act as resistance on the way up. So we took our 11.4 pips. Like I said, I'm surprised to see this thing spike up to the top of this consolidation and actually broke broke this consolidation area from yesterday, 29th. Only momentarily though, and you can see what happened. It reversed back down. So I guess we left some on the table. But in our opinion, we really didn't, because that's a lot of consolidation for it to get through. And if it gets through, it has a really great potential to run. But that's not what we're looking to risk and stuff. It did get through it, but ultimately failed. So we would have been wrong if we had our profit targets up much higher, thinking it's going to bust through it. So we'll take it and move on. And Australian dollar, Japanese yen, we were short this, 95.835. Again, we have all this consolidation, but it wasn't there by the time we had the spike down and failed to cover. So we figured, all right, let's just put it in somewhere around below this consolidation and see if we can get through it. You already had this one big spike with good volume. It could very easily come back down and bust through it. And that's what it did. Picked up. We ended up picking up this should be red. I'm sorry, we have this in. This should be green. We have this in red because this is a profitable trade. We picked up 23.7 pips on that trade on the profit side. Again, this should be green, not red, because we were short 95.835. We covered 95.598, so that's a profitable trade. Picked up 23.7. Could have held it longer, but you have all this consolidation as well, and that's right where it went. So we covered there overnight again. Woke up this morning, come in the office, and it was pretty much where we covered. Early this morning, 4 or 5 o'clock in the morning, it broke down lower. We weren't available at that time, so we'll take it. 8 trades, picked up 56.7 pips, pretty solid overall, and we'll move on to tomorrow. If you're trading now, good luck. Signals come out, we'll be sending them your way, and that's it. We'll wrap it up. Have a great evening, and back tomorrow.